Good afternoon, ladies and gentlemen, and welcome to the Wapic Insurance Plc Half-Year 2019 Investors Analysts Conference call. My name is Bode Ojeni, Executive Director of Sales and Distribution, and I'm being joined today by Mrs. Yinka Adekoya, Managing Director, Wapic Insurance Plc, Mr. Adedayo Jolu, Managing Director, Wapic Insurance Ghana Limited, Mr. Olufemi Obaleke, Executive Director of Subsidiaries, Mr. Peter Ehime, the Chief Risk Officer and Executive Director of Technical Division, Mr. Adewale Koko, the Acting Managing Director of Wapic Life Assurance Limited, Mr. Olushola Ojeniyi, the Chief Investment Officer, and Ms. Toyin Aziz, the Acting CFO. For your information, the half-year results being presented at this session was published this week in the National Daily. During this call, we will be discussing our business outlook and might make forward-looking statements. These statements and comments are based on our expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties. Before we jump into the presentation proper, just a few housekeeping matters. We are streaming live, and as such, the presentation is shared on your desktop and laptop. At this time, we advise participation to be on listen-only mode. I would therefore request that you please be kind to mute your microphones so that you can hear us clearly, and so that background noise does not interfere with the audio. At such a time as the presentation is concluded, we have left ample time in the agenda for questions. Instructions for participation in the question and answer session will follow at this time. We will also take questions that come via the chat feature on WebEx. During the Q&A session, please limit yourself to one question and possibly one follow-up question. Attempt to moderate the questions as seamlessly as possible. As a reminder, this conference is being recorded. Thank you, ladies and gentlemen. We'll now go into the presentation proper. On slide 4, we present the outline of the presentation, and shortly I'll be speaking to you about Wapic, our operating environment, the regulatory environment, and shortly after that I'll be handing you over to the Acting CFO, Ms. Toyin Aziz, to take us through the financial results and analysis. Then thereafter I'll come back to present the outlook for the second half of the year and how we see things, and then we'll go into the question and answer. Moving on to slide 4, we present a snapshot of the Wapic Group. Today we operate with three operating entities: the Wapic Insurance Plc, which is also the holding company for the group, Wapic Life Assurance Limited, and Wapic Insurance Ghana Limited. We also have an associate company, Coronation Merchant Bank. The total asset under management is 9 billion naira out of the total portfolio of 31 billion. We have 179 professional staff, and our total number of shareholders is in excess of 850,000. We have regional offices in Abuja, Benin, Enugu, Ibadan, Port Harcourt, and Kano. We are listed on the Nigerian Stock Exchange, and we also have a GDR depository bank with the Bank of New York, Milan. Our market capitalization as at date is about 6 billion naira, and our reinsurance include Munich Re, African Re, Waika Re, Continental Re, Nigerian Re, and Ghana Re. Our actuaries are Ernst & Young, while our auditors are PwC. On slide 5, we present a summary of the operating environment, and I'll be speaking to these under 4 headers: GDP, growth, inflation, crude oil, and the exchange rate. The country's GDP advanced 2.0% year-on-year in the first quarter of 2019, easing from a 2.4% expansion in the previous period and below the market expectation of 2.1%. GDP annual growth rate is expected to be about 2% by the end of Q2 2019, according to analyst expectations. Inflation. Inflation has flattened in the 11.2% to 11.5% range in recent months, after steady moderation. Inflation as of June 2019 was 11.22%. The Central Bank of Nigeria maintained its policy stance on anchor rate at its MPC meeting held in Q2 2019. The policy rate was retained at 13.5% amidst consideration of spurring economic growth and strive to keep the fragile exchange rate in check. Crude oil. Nigeria's burning oil price declined to $53 per barrel in December 2018 on the back of a decrease in fuel demand. This was below Nigeria's $60 per barrel budget reference price. The key indicator, however, edged up in the first quarter of 2019 and reduced slightly at the end of June 2019. On exchange rate, the Nigeria currency market conditions were mostly steady in the first half of 2019 as the Central Bank of Nigeria stayed unswerved in protecting the local currency. Naira moderated and stabilized at around 360 Naira to the dollar at the end of the second quarter of 2019. The outlook for Naira in the short to medium term is relatively stable based on current level of foreign reserves and impact of agreed production cut on oil price. We move on to slide 6, which speaks to the regulatory and industry environment. NICOM in May 2019 announced a major increase across board in the minimum paid-up share capital of insurance and reinsurance operators in Nigeria. The deadline for compliance is set at the end of June 2020 for all existing operators, while it takes immediate effect for new applicants. In addition, the Commission, ahead of the planned recapitalization, has given operators up to the 20th of August 2019 to submit their capital raising or recapitalization plans and strategy. The erstwhile Commissioner for Insurance, Alhaji Mohammed Kari, completed his 4-year term in office and handed over his role to Mr. Sonny Thomas, the Deputy Commissioner Technical, last month. Mr. Thomas, the new Acting Commissioner for Insurance, was appointed Deputy Commissioner for Insurance Technical on April 15, 2017. He was once the Director General of the Nigeria Insurance Association. The President of the Federation, Muhammadu Buhari, at the opening of the national conference organized by Insurance Industry Consultative Council, IICC, asserted the full backing of the federal government for the new capital base for insurance operators set by NICOM in May, and advised all operators to take advantage of this. The President also warned insurance operators to desist from fighting against the sector's recapitalization policy initiatives. Also, NICOM, in its determination to expand the scope of insurance distribution channels in Nigeria and deepen insurance penetration, has said that it will review the recently withdrawn state insurance producer policy to push insurance services to all states of the Federation. This is expected to take insurance services to where the populace is currently underserved. And finally, the Nigerian Council of Registered Insurance Brokers, NCRIB, enjoined its members to be wary of where they place their business to ensure the protection of the image of brokers and that of the Council. The NCRIB President Shola Tinubu stated this at the members' evening, stressing that the news have been making rounds that some brokers still indulge in placing business with companies that are challenged. I'll now hand you over to Ms. Toyin Aziz to take us through the financial results for the half year. Toyin.
Thank you very much, Bode. I will not and on was 10 billion and 103% in period last year of it. It grew from 6.2 for the same period this year. Underwriting income increased by from 4.4 billion in 2018 to 4.7 billion after. We also have an increase by 14% to 3.4 billion. This is our net investment and other income. We have also decreased last year, and our profit increased by 7% from 241 million last year to 401 this year. Our OPEX margin ratio declined from 34.5%. We are also net claims ratio. It's a decrease of 16% from 49% last year to 45%. Looking at our financial positions, asset from 7.8 billion to 7.9 billion. Reinsurance assets increased. Our total assets increased by 30 year 2018 billion year 2019. Total liability billion to 14 billion. Shareholders fund also increased from 7 ROE and ROE increased from. Moving on to the next slide. Income statement. That has continued in its positive growth trajectory within the period. Reinsurance expenses increased in line with growth in GWP for the period. The percentage change was largely driven by the base effect. Increases in facultative reinsurance outward, specifically within our engineering product portfolio, was responsible for this. Net claims expense experienced a positive decline of 10% for the period, with claims recoveries and a positive movement in outstanding claims, that the effect of the claims. Underwriting declined slightly by 5% on a year-on-year basis to 1.26 billion in underwriting expenses. The company measured compared to the period position. Our profit before tax increased in June 2018 to. Moving on to the next. Oil and Our life and health respectively. This was driven by a notable in our engineering portfolio. Our engineering portfolio has a share in underwriting profits the group's product at 37%. Aviation and fire portfolios made under general accidents with margins of 5%, 30% respectively. Moving on to the next slide. Next, this is reflected 12% year-on-year basis. Premium income reduced slightly by 3% from the prior year. Consequently, this led to a claim which dropped to 40% from 49% in June. Underwriting expenses grew a premium GWP. That was a 42%. We remain on our drive to maximize efficiency and in our underwriting operations through business process automation across all service levels. Moving on to slide 13. On the next slide, we'll take a look at our operating expenses and reinsurance expenses. The component of operating expenses, which costs and other OPEX, reduced by 9% and 12% respectively when compared to the same period in 2018. Margin ratio for the period reduced to 10%. And it the growth in our we closed at 44 billion as at 18. The ceded premiums on period will the growth in our reinsurance expenses for the period. Moving on to slide. Which 19 and it's 2% year on 18. We are confident to the end of premium inflows for the recent contribution follow written. This is a reflection of the impact of our business restructuring carried out into the largely underserved commercial and SME sector. Our Ghanaian subsidiary also contributed some of revenue to the. So now move on to slide 15. profit position. Underwriting profit margin ratio from years as at half year 12. Following this was occasioned by the increase in underwriting expense built in revenue. Before tax grew by 67 from 240 recorded in the same 6-month period last year. Return on earnings recorded positive increases for the period to close at 1.8%, 0.3% respectively, year 2019. Slide 16. We are now to take a look at our statement of opposition. Cash and cash equivalents of 1.09 billion was recorded for the half year 19. This is a 62% increase on a year to the year end 2018 position. The company's asset portfolio rebalancing for strategic growth was a major driver of this. Trade receivables from brokered businesses during the 6-month period was a major driver of the growth from the 2018 full year position. All receivables recorded in our books are adequately backed by 30-day credit note from the respective brokers. Our year-to-date change in investment contract liabilities was 2%. This was likely driven by the growth in the company's pure risk investment-linked obligations. The company's investment property position remained unchanged at 253 million. Insurance contract liabilities grew by 12% on account of the increase in reported reserves period. Total assets and shareholders' funds also grew slightly by 3% and 0.3% respectively for the period. Moving on to the next slide, slide 18. This takes a look at the highlights of our financial position. Total assets for the period reduced by 5% from our full year position to close at 63% as at year 2019. The driver was the decrease in cash and cash equivalents due to portfolio rebalancing strategy for the period. Total assets increased by 3% when compared to prior year, mainly as a result of the increase in reinsurance assets during the period. In liabilities was by 24% from our full year 2018 position, and this brought us to 14 billion half year 2019. Major drivers include the growth in the company's insurance investment liabilities on account of increase in unearned premium and also reported claims reserves. Shareholders' fund maintained a rather flat position, 1.16 billion, as at 2019 compared to 2018 full year figure of 17.11 billion. Now a look at under management. Our bonds portfolio had a decrease of 5% during the half year to close at 5 billion from 5.25 billion at the beginning of the year. The mark-to-market recovery in value of quoted investment holdings underpinned the marginal growth despite the bearish trend in stock market in the half year 2019. The period witnessed a 38.5% reduction in treasury bills and placements respectively due to operational payment pressures. Investment property recorded no movement. The strategy is to fully exit the legacy properties with more focus on investments with higher yields. The combined effect of decline in treasury bills in the portfolio to meet operational payment resulted in an overall decline in our asset under management by 6% during the period. However, our portfolio is well diversified to achieve long-term growth objectives. Thank you very much. And now take you back to the for him to continue with the other parts of the presentation.
Thank you, Toyin. Ladies and gentlemen, we'll now on slide 25, where we present the outlook for the future as we see it as Wapic. And I'll be speaking to these under 4 headers: the financial, the operational, sales, and people. On financials, we expect to continue to outperform the industry average GWP growth rate in line with our strategic growth expectations. We will continue to optimize efficiency and flexibility in our underwriting operations through business process automation across all our service levels. We would also consistently ensure financial discipline, proper risk-based pricing, and portfolio management across the business operations. In our operations, our digital division will continue to drive the implementation of the growth digital strategy, including digital marketing, channels management, and data analytics and intelligence. Our value proposition to customers will continue to include excellent service delivery and competitive pricing. We will continue to improve on our risk assessment through advanced information analysis and reporting tools. On sales, we'll continue the expansion of our agency sales structure countrywide, solidify our direct sales business strategy for top-line growth. We are furthering the full implementation of our bank assurance model in all major state capitals across the country. We will also continue to deepen our insurance services into the commercial and SME space in order to further diversify our market share and earning base. We will further consolidate our drive for leadership status within the large corporate space. On people, we stay committed to becoming a great place to work, building future champions, transforming economies, and investing in our communities. We will continue to engage and inspire our staff to become high performers with high potentials, having the right people in the right jobs, and rewarding and developing them as well. We'll continue to inculcate the behaviors, culture, and innovation associated with leading customer experience providers. This brings us to the end of our presentation. Thank you for listening in. The floor is now open for questions and answers. Should you wish to ask a question, please unmute your phone or computer at this time and speak. We would like to ask that you indicate your name and company as you ask questions. Let me reiterate. During this Q&A session, please limit yourselves to one question and possibly one follow-up question. We will attempt to moderate the question as seamlessly as possible. Thank you very much. Ladies and gentlemen, we're in the Q&A session. I would like to take your questions at this time. Yes, good afternoon. Thank you. Thank you, Mayowa. Your question was, how confident are we that Wapic Life will be able to meet the capital raise by June 2020? And what specific plans do we have for this? Thank you for your question. You will recall that in 2017, we had proactively obtained the approval of our shareholders to raise up to 10 billion naira in the market. This was in anticipation of any move by the regulator to recapitalize or introduce a minimum capital for the industry. And if you recall as well, at our last AGM, we had also obtained approval to issue new shares. These were all geared towards recapitalizing the organization. So today, Wapic Insurance Plc is fully capitalized and does not have any issue with the new directive by the regulator. We have also put plans in place for the full capitalization of Wapic Life, being a 100% owned subsidiary of Wapic Insurance Plc. If you recall, just a few days ago, we had an extraordinary general meeting, which was to get the shareholders' approval to go on with our plans. As the days unfold, you'll begin to see all the plans that we have in place. But be rest assured that Wapic Life will be fully capitalized even before the end of the year. Thank you very much. I hope this answers your question. Thank you. Ladies and gentlemen, the floor is still open for more questions. Please unmute your phone or computer and speak. Once again, please indicate your name and the company as you ask the questions. Thank you very much. Ladies and gentlemen, the floor is still open for questions. Thank you. In the absence of any further questions, we would like to say thank you very much, ladies and gentlemen, for participating at this analyst conference call. We look forward to having you on board again when we present our Q3 results and, of course, our full year results. We would like to thank you for your support and for tuning in today. Thank you, and do have a blessed day.